All right. Good evening, good afternoon, and good morning, wherever you are located. It is another beautiful day. How are you doing, my brother Gustav? We can hear you.
Okay, can you hear me now?
Yes.
Man, I feel blessed today. It's an awesome day to be alive. I was just looking at the flyer you have on your status for, you know, you're probably one of the most interesting flyer designers I know in town, brother, but it's always a joy just having you. We're always looking forward to this day and today is Friday. We were supposed to do it yesterday, but because of a master class I had, so we're doing it on Friday. But man, what a pleasure and plumping joy for me. How are you?
No, I'm doing well. I'm doing well. To all the viewers, if you're joining us today for the first time, we always come here every Thursday just to talk about money, clarity, building wealth, and anything related to life and finding your purpose. Today, joined with me is my friend, mentor, and my business partner, Gustav B. Achu. He's a speaker, he's an investor, he's a legacy architect, and after experiencing bankruptcy and foreclosure, career pivot, and major financial setback, Gustav B. Achu rebuilt his life through disciplined investing, ownership strategy, and purpose driven by wealth building strategies. Today, he helps ambitious professionals, especially first and second class generation immigrants, to build generational wealth. His work focuses on purpose, ownership, and legacy, teaching families not just on how money works, but on how to multiply, protect, and perpetuate it. My brother, you're more than welcome again to this session. And we look forward today to an incredible discussion because we are living in a very, very strategic period in time. We see the United States just got engaged in the past couple weeks in a war with Iran. The Middle East is in a set of turmoil. The Strait of Hormuz have been closed. That is where the majority, more than 80% of oil is being transported to major countries.
That's right.
Oil prices have been skyrocketing. Inflation is kicking in. The entire world is in a state of turmoil, and people currently are losing their jobs. The other day, Facebook came up with a measure downsize of their employer or workforce. Man, we don't know where to go. People don't know where to hide. Some folks have lost their job. Some they don't have any way to make any kind of income. What do you have to tell the viewers today? Especially those that maybe never invested, those that have been investing but they can't invest now, and those that have been seeing your portfolio shrink in the past couple weeks since the United States invaded Iran. What do you have to tell them?
Well, Dr. Dimo, first of all, it's just a great plumping pleasure being on the platform today. And the one thing I know for sure is that at every point in time, you are reminded of what Stephen Covey wrote in one of his best-selling books. And Stephen Covey is a behavioral and sociology, behavioral sociology and business coach. And Stephen Covey wrote a very popular book called The Seven Habits of Highly Effective People. And in that book, he talks about something which is a very important principle that I believe now, like ever before, it is necessary to understand. He talks about something called your sphere of influence and your sphere of concern. Your sphere of concern are things that bother you, are things that you're worried about, but you don't have direct influence to change the outcome. But your sphere of influence are the things that bother you, but you have a direct influence to change the outcome. For example, certainly war is never a good thing, But you and me are not naive to believe that the world is a place of very peaceful people. Everyone is going to be lovey-dovey, kissing each other lovingly, giving them pecks on the jaw, shaking their hands, giving them a big hug, and telling them how much they love them like brothers and sisters. You and me knows the world is run on interest. And interest changes at every point in time. Today's friends could be tomorrow's enemies. So you must understand that if you are an investor, let me start with somebody who is an investor, and then I'll go to somebody who is even looking out and thinking of investing. You must realize that war is part of human existence. It's been existing that way for hundreds of years, and it's going to continue to be like that. Now, the important thing to understand is none of us, unfortunately, has access to President Trump or the executives of America to share with them how we really think they should not go to war and all of that. Even if we do, the news media, some of them have shared that, senators have shared it, but the president made a decision to take the country to war with the hope that it's going to benefit America. So as an independent investor, should be told, I'm not worried about that. I'm worried, yes, maybe it's affecting the economy and things like that. What is more important to me is to maintain my sanity, because my sanity is what drives my behavior, and my behavior is going to drive my perception of the market, and my perception is going to drive how I act relative to what is happening. Now, you must realize something, Dr. Edimo, and everybody listening to us. I want you to pay very close attention to what I'm going to be telling you in the next 3 to 4 minutes. 90% of retail investors are going to lose money during this crisis and during this war. And they are not going to lose money because they are unintelligent or they are dumb or they are not smart. They are going to lose money because they panic, they sell, they run on their emotions, they lack strategy, and they lack an understanding of how the stock market works historically. Now, what do I mean by this? Listen to me very carefully, guys. Understand this very well. Once you understand what I'm going to tell you right now, it will make you a very successful investor from today going forward. Historically, and I'm not talking here about how I feel sorry for those who are being killed. I feel sorry for the Iranian people. I feel sorry for the US military officers that are being killed. I feel sorry for the people who are losing their jobs. I feel sorry for everybody going through hard economic times. But I just want to talk about what the cold facts say. The facts say this: historically, the data tells me that whenever oil rises 5% for 2 consecutive days, which has already happened when this war started, during any kind of geopolitical event, the stock market returns 22% over the next 12 months. I don't know if I make sense here, Dr. Edimo.
Yes, we're getting you.
Anytime this oil prices rise by 5% due to a geopolitical or a war situation, the stock market returns 22% over the next 12 months.
So
and this has been the case.
Just one thing, so that people should understand this. So what is going on right now is setting ourselves for a better tomorrow. That's
absolutely,
okay.
Absolutely. This is a setup for a major comeback, right? Yeah. This is a setup for a massive turnaround. And it's not only that case, but 83% of the time, the year ends in a positive note. So what is the takeaway? The takeaway is, despite the war situation, people should remain optimistic and hang on to their solid investments. And I want to say this too, because something that really affects a lot of retail investors who are listening to us and who don't listen to us, but because they don't understand how these things work. You must understand something, guys. Anytime you miss the 10 best days in the market over a 20-year period, it reduces your returns by 50%.
Good.
And the only way you don't miss the 10 best days is to continue to stay invested. Yeah. It's not to panic. It's not to react to what the news is saying and go take decisions that don't make sense. And let me say this, Dr. Edimo, because it's also important to give some examples in real life that history has taught us. Let's take ourselves back to the Iraq War, the Gulf War in the 1990s. You remember General Schwarzkopf, the Major General Schwarzkopf and the American army. Now, when Iraq invaded Kuwait back then, the market dropped sharply. The S&P 500 dropped 17% within about 2 months. Investors panicked. Oil prices spiked, right? But within 12 months, the market didn't only recover, but even during the Gulf War itself, the S&P recovered and started delivering at 11.7% annual returns. I want us to understand that, guys. Let's take another example. The Iraq War in 2003. Same thing. Markets were nervous. People were scared. Oil prices spiked. Bounce conflict began, and people started selling their stocks. But within a few months, the S&P 500 was already producing 13.6% returns. So uncertainty is usually worse than the reality. The perception of uncertainty is usually worse. And why am I sharing this? Because a lot of people who listen to you and me are retail investors, or maybe are people who have not started investing and might be afraid. If you are sitting on the sidelines and you haven't started investing yet, this is your perfect opportunity. Because what is happening is that you're buying these assets at some of them 25% discount, 20% discount, 15% discount. I was reading an article yesterday that says Meta dropped by 8% because of some antitrust lawsuit. I think Meta and Google, some antitrust lawsuit they are facing. That's a perfect opportunity to get into companies like that, because you might never see these low prices again in the next 15 to 20 years. It only comes along once every 12 years, I believe. Now, let me do one more thing, Dr. Edime, before I let it back to you to move forward. Let's talk about the typical market pattern during the war, right? Usually when there is a war or a political unrest or an invasion like what is happening today, within the first 10 days, the market usually drops about 5 to 7%, right? Historically. Now, around day 30 to 35, the market starts stabilizing, all right? And then the market starts stabilizing. And then around 12 months later, markets historically recover about 8 to 10% on average. I want everybody to understand that. So markets price fear quickly, but return to fundamentals very fast. So it is an advantage for everybody, especially if you're on the sidelines now. You have money. You've been wondering whether it's a good time to invest. This is the time for you to get in. The only important thing is that you just don't want to get in blindly. You want to get in with some guidance. You want to get in with coaching from people who know what they are doing, so you can position yourself for the rebounds and for major long-term gains that will come in the future.
Incredible, incredible, incredible. Nobody else could say this better than you, man. I think you should start being a contributor on CNBC, because I'm telling you, I'll be sending this recording to Jim Cramer and then CNBC team.
Oh, yeah.
They can eventually invite you to come talk on some of these issues.
That was wonderful. Talk to your man Jim Cramer. I know he's your friend and mentor. He's brought you on his platform a few times.
Yep. You know, the Iran war is not just a geopolitical war. It is an energy shock first.
Yeah.
Because this affects the entire economy. And the Strait of Hormuz carries 20% of global oil supply. And disruptions have already pushed oil price up 50%, and it can even go to the extent of 100%, depending on how long this war goes. You know, high oil prices, high gas prices, shipping costs is expensive, food and production. People are in disarray. The economy is tough. We are at the brink of an inflation. And right now, the dollar is not holding as strong as it is. As a regular person that does not understand all these geopolitical strategies or what's going on, how can you simplify this to a regular person who is maybe investing and seeing their portfolio down 15, 10%, seeing their portfolio down, depending on how they've been investing, 20%. How do you tell such a person? Because this is where you differentiate from being an investor to being gambling in the market.
Correct.
What do you have to say to these people so that they don't make those decisions that will hurt them rather than build them?
Absolutely. And I like the fact that you bring that up, because Dr. Edime, at every point in time, guys, investing comes down to some basic fundamentals. Anytime you want to invest in a company, number one, you must have a long-term view of that company. And a long-term view of the company means you want to invest money in a company that you want to hold those shares of that company for a long time. That could be 5, 7, 10, 15, 20 years. Because where the money is in investing, it's not in the buying and in the selling. The money is in the waiting. Because what happens is the companies grow and the value of that company increases. So for you to invest in a company, you need to judge that company on a certain criteria or a certain set of metrics. And to give you basic examples, because you want to invest in this company and hang on to it for 10, 15 years, number one, you want to make sure that that company has products and services that people will always demand it for 10 to 15 years. Otherwise, the company is going to close down. Number two, you want to make sure that that company has a competitive advantage, which means that a new company cannot just easily come and start doing what that company is doing and take over their market share. Number three, you want to make sure that that company has financial certainty. What I mean by that is they have an emergency fund. When we talk to you about an individual in your financial planning, we always talk about the good practice to make sure you have an emergency fund so that when you don't have a job for 6 months, you can still pay your bills. Companies are the same thing, no different. During times of difficulties, during times of war, maybe there's an economic recession, people are not buying their products as much as possible. The companies still need to be paying their staff. So you want to make sure you are investing in a company that has financial strength. Now, there are other things, there are other criteria, but I don't want to get into too much of those scientific things, right? Now, when you make that judgment, what it does, therefore, that it permits you now to be able to invest in companies that you know that can last for a long time. But you also understand that that long period involves a lot of different things that will be happening. There will be economic unrest. There will be war like it is happening today with Iran. Sometimes there will be strike. Sometimes the federal government is going to increase the interest rate. Sometimes they will drop the interest rate. But doing all of these processes, you want to make sure that the company you are investing in has the ability to navigate these different changes in the world, but still be able to be ahead. So the critical thing to understand, especially during times like this, when there is uncertainty, if you are just starting to get invested in the market, you want to make sure you are investing in companies that have the ability to withstand periods like this. Because if you've been investing in companies where you are just gambling, during downturns like this, that is when those companies disappear because they don't have enough money to pay their staff and wait till the economy turns around. Sometimes their products are not that high in demand, so nobody is asking for it anymore. They don't have any revenue coming. Sometimes the company is not even well structured yet. It hasn't been proven. It hasn't gone through a difficult period to test its ability to withstand difficult times. So you must understand something. The worst thing you want to do for yourself as an investor is to be on the side of gambling, is to be on the side where you decide on companies and index funds to invest based on what you hear people saying on the street or based on what some analyst is saying on the news, right? When you listen to people like us who know what we are doing, we talk about what we're doing, you still have the responsibility to go back and do your own research. Yep. We are just giving you hints. We are giving you guidance here. We are giving you things that we are doing and it's successful for us. But for you, it is important too for you to do your own research, because when you are doing that research, it is also helping you to develop your understanding of what it takes to become a successful investor. So if there's ever been a better time to become successful, build wealth, and generate significant growth in your portfolio, is during times like this. Because millionaires in the stock market are not made during the bull markets, they are made during the bear markets.
Absolutely. Absolutely. You couldn't have said it any better. The biggest mistakes that investors make during a war isn't in losing money. It's sitting on the sidelines while wealth is quietly being built by those who stay disciplined.
Yes, very true.
At this point, with respect to WallSmart, we have some kind of a signature position. We don't react to events. Like, I'll tell you, my portfolios, just one of my portfolio is down close to $60,000.
Correct.
And I don't react to this event because, again, we are positioned to buy companies that we know are solid companies, or ETFs that are solid ETFs that are combined of solid companies. And we have a more diversified portfolio that even if that portfolio goes down by 45%, we have no worry because it's going to come back. You know, And that is the mindset that folks should be looking at. And also allocating your portfolio to tie to the certain things that are going on is very, very critical. And this is one of the situations why you're always required or advised to have cash on the side to take advantage of opportunities like this. Because investors that have cash, they say, is the king. Those that have some cash right now, they don't need to deploy everything into the market right now, but they can deploy gradually in order to take advantage of this discount. I usually tell people the easy way to look at stocks, right? When you get up in the morning, what do you do? Some folks, they have Androids, some have iPhones. First thing they do, bam, they pick up your phone. So if you have an iPhone is made by who? Apple. Why don't you own Apple companies?
That's right.
Some folks, they decide to go to the gym, and guess what? Their outfit that they are wearing is made by Nike. Why don't you own Nike companies?
You don't own Nike.
Yep.
True.
While you're in the gym, maybe you think you've seen something that you like. You're scrolling through your phone on Amazon, Amazon shop there. Why don't you own Amazon? So look at the things that you're interacting with on a constant basis. It's not just you that might be interacting with those companies. That is the beginning point to see how those companies have been performing over the past 5, 10, 15, 20, or even 30 years. This thing is not rocket science. It is not rocket science. But folks just have to start understanding, getting that mindset. And I was talking to one of my mentors yesterday. He was telling me it's rather unfortunate, right? Because we are living in a time where each and everyone could invest.
Yes.
I have folks listening to me from Nigeria. I have folks listening to me from Cameroon, from Gabon, from South Africa. I have told them, I've given them opportunities. They have the privilege to invest even from their country. You know, and investing, you don't necessarily need to have a lot of money to invest. You can start with $5. You can start with $2. It adds up in 5 years, in 10 years, in 20 years, in 40 years. It's rather unfortunate that people listen, but they don't take action. And listening or joining some of these calls without taking action is just as the same like the person that doesn't listen. We are here today because we took action. We took action. We have failed multiple times to get us to where we are today. But it's as a result of those failures that we've gotten that we are here today trying to educate some people and coach people to teach them even to learn from our mistakes and not to make the same mistakes that we made.
Very true.
What do you, in your position and in your experience, right? What are some of the things that you would tell folks, especially those folks that have been listening to us, have been following us? They can't make that decision. What is holding them back? Talk directly to those people, because I'll bet you 5 years, 10 years, 20 years, especially those that are coming to me right now and starting, all what they tell me is, I wish I could have started 10 years ago.
Correct.
Wish I could have started 5 years ago. But you bet, you guess what? 10 years from now, 15 years from now, it's like a tweak of an eye. We will get here. Talk to those people and tell them what you're missing.
That's a good one, Dr. Dimo, because there's something I usually say. I say one of the biggest financial mistakes anybody can ever make is actually delaying to start investing or delaying to start building wealth, postponing that decision. Because as you know, making no decision is a decision in itself. A lot of times, unfortunately, like you mentioned, people really realize the impact later. But let me tell you this, guys. If you are on the line listening to us here, waiting is very expensive. But what most people don't realize is they don't see the bill until it is too late. It is not dramatic. It is silent, right? You are not losing money. You are just losing time. And you are losing something, which is an asset and you cannot get back, unfortunately. Think about it this way, right? If you're starting early, you start early, you invest, and then at the end of it, you end up with more. You know why? You started early, you invest less, and you end up with more. Somebody else starts late, invests more, takes more risk, and still end up behind. And let me tell you why. It's because the one single most powerful thing that is responsible for building your wealth, which is time, you have lost it. I will tell you something, guy. When I hear people say, I will start later, you know what they are really doing? You are really choosing to pay a higher price for the same result. That's really what you're doing when you're saying you're going to start later. You are going to be paying a higher price for the same result, or maybe for even mediocre results.
Mediocre results, yes.
Because the biggest financial mistake isn't losing money, guys. That is not the biggest mistake. It is losing time. Because Dr. Edimo just mentioned that his account is down 60,000. My portfolio is down 117,000. I am not bothered. Do you see me stressed? Because I am not losing. It's just a temporary drop in the market. I only lose money if I sell it. But I'm not planning to sell it because these are companies I plan to hold for 20 years. So you know what? By next few months, it's going to be green and even more money for me because all I've been doing is just adding more to those portfolios. So listen to me and understand this, guys. Let's take a simple example here, right? It doesn't matter what age you are. This is just strictly for illustration. Take somebody who is 25 years old. You start working and you are investing $500 a month. By the time you turn 55, which is 30 years later, your portfolio growing at 10% will be
Can we put that on the screen?
Okay, let me do that. Yes. Right? That's very true. Let me do that. Let me share my screen, guys. This is important. This is important. Let me see. Yes, let me present, share screen. Okay, good. Let's do something here, right? If you guys are watching, I hope you can see my screen. Can you see my screen, Dr. Edimo?
Yeah, let me bring it up. Yes.
Wonderful. Awesome. Here is the power of what I'm saying. Okay, guys? And I want you to understand this. If you don't take anything away from this live stream tonight, I want you to take what I'm going to show you right now. Let's take an example. A young person at 25 years old who starts working. He starts with $500. And every month, he invests $500 in his account. That account grows. He just buys some basic ETFs. And that account grows by 10% every year annually, averagely. And he does that consistently with the discipline for 30 years. By the age of 55, his portfolio will be worth $1,040,000. But here is what is even more interesting. In those 30 years, he only invested $180,000, and he has a growth in his portfolio of $859. Now let's do something else.
$859,000.
Sorry, $859,000. Basically, $860,000.
Yep.
That is the growth in his portfolio. Now let's do something else. I want you to let me just take a screenshot of this. And then I want you to keep this number in mind. Okay, guys? If you have a pen, write it down. Let's do something else. Let's take another gentleman. He starts with $500, the same. But instead of the 30 years, he invests only for 20 because he waited 10 years to begin. He started at the age of 35 years old, right? And he's doing the same thing. He invests $500 every month. Now, let's see what happens. He lost 10 years. 10 years is not even half of the 30 years that they have been investing. I want everyone to follow me here. He started 10 years later, but look at how much more he lost in growth. He only ends up after 20 years with 362,000. And the other person who invested for 30 had a growth of 856. So in the 10 years he delayed, he lost close to $520,000. I don't know if my math makes sense.
Yep.
That is what we are talking about, guys. This is no joke. This stuff is important. If you are waiting on the sidelines, you can start investing with 30, 40, 500, 200, 300, $1,000. Don't think it. The only thing you should be asking yourself is, that you shouldn't be asking, but you should be telling yourself, who is the coach I want to work with? That's it.
Yep. And
That's
just that will bring this back into perspective, right? Someone that did this for 30 years had 1,040,000.
Yes.
Someone that did this for 20 years, that started later, 10 years after the person that started for 30 years, had $360 something thousand.
Yeah.
That is over $700,000 difference.
Yes. That's
This-
huge.
This is huge. And
That's huge.
the thing that Warren Buffett says is, investment is about time in the market, not time in the market. So I've seen folks that get into the market, they make a little bit of money, they put 10,000, they make $1,000, 10%, they're out.
Correct.
Something like this happens, their portfolio goes from 11,000 to 8,000, boom, they're out. You've lost 2,000. They're waiting for when the market is going to bounce back. Okay, they come, they sit, they watch. Oh, Dow was up 1,000%. The next day they come in, boom, they put in that 8,000. They go back to 9,000. They take the $1,000 and they're out. You don't build wealth like that, guys. You're gambling.
Of that 1,000, they're already paying about 25% in taxes first.
Yep. So you're in and out of the market. You're trying to time the market. If anybody could do that perfectly, even the hedge fund advisors out there that have all the technology, all the insight, they can't still time the market. So there shouldn't be a reason for you timing the market. Those that are doing short-term option trading, that is a passive way of making income, but you have to understand how you're doing. And there's a high probability you will lose your money doing that. So that's why I'm not yet telling people, oh, you should be doing options. If you're doing options, which I teach people how to do options, you should understand the risk that comes with options. Options is like gambling. There are some other areas within options that you can sell and take premium on the holdings that you're making. So if you have invested that much and you have a good number of shares, you can just be making passive income from option trading, So that is some of the things that folks have to start understanding. And no matter where you're located in this globe, there is always an opportunity for everyone. Can you please tell our viewers about, because especially the culture that the culture that we grew up in, and mostly the people, your niche that you're looking at, that's immigrants and people that come into the United States and other countries to look for better ways. Can you talk about this concept of Njangi, Susu, as opposed to investing for the long term? Can you briefly say something about that?
Absolutely, Dr. I think the whole idea of Susu, Njangi, and all of that, it has a place in our financial life, but it really doesn't have that big a place. And I'll say that first of all, I want to put some context to this, right? Because here is the deal. Most people really aren't lazy. They are just waiting to feel ready. That's why they will usually keep postponing. And I'm going to come to what you asked me. That's why they keep postponing this decision to invest, right? But clarity doesn't come before action. It comes from action. So if you are sitting and waiting for the perfect time, or you're sitting and thinking, okay, I'm not ready yet, I need to be ready, you will never be ready, right? Because later feels responsible, but it's a fear wearing a suit. Later might feel like you're trying to be a responsible person, but that is just fear wearing a suit and looking nice. Waiting for perfect timing, never starting, that is going to cost you. Let me put it this way, right? And this is really connecting to the Susu idea, because Susu is like savings. Susu is even worse, because at least in the savings account, they will give you 0.75% in interest. Susu, there is no interest. Susu, Njangi, all of these things, right? It's basically a system where a group of people come together. They contribute money every month and give to one person. Now it has its place in a group where maybe they're entrepreneurs. Every month they give one person capital to go start a business. And that business now starts generating money, and you use that money to pay back every month the amount that each person has to donate. It makes sense. If it's for a short-term problem, maybe you ran into a situation and you needed to put money together and take care of that, it makes sense. If it's to maybe put money together to put together for your emergency fund, it makes sense to be one of the early people to get the benefit. You take that money, you go put in your emergency fund, and as you work, you replenish that money by making your own donation, your own contribution into the pool. But it doesn't make sense for most people, because you are basically contributing money, saving your money to get it after maybe 12 months, 18 months, 24 months, and that money comes back to you without interest, and it comes back to you after inflationary impact. So if inflation is 3%, like they say, but the real percentage of inflation is 8%. So if you put $10,000, by the time it comes back to you, it's no longer $10,000. It's 8% less, which is basically $800. So you are getting $9,200 in purchasing power. Yes, you will get $10,000 cash, but it can only buy $9,200 worth of goods and services. It can no longer buy the same amount of goods it could buy when you started contributing into that Njangi system. So to me, the Njangi part of our financial plan should be a piece which we use very carefully and very limited systems. The only other thing that is valuable for Susu and Njangi is maybe the social interaction. But there are other ways you could interact with your community socially without needing to lose money in that process, right? I cannot tell you, Dr. Edimo, I cannot stress this enough. I have a client of mine, and this lady came to me about 5 months ago. And when I sat down with her, we started looking into her numbers. One of the things I realized, and she told me crying, is that for about 7 years, she has been playing Njangi of $7,000 every month.
Wow.
By the time we did the math, I showed her that in those 7 years, she has lost about $270,000 in growth. That same money would have produced for her. She burst out crying. I said, but this is why it is important for people to take their financial life seriously. You see, we spend a lot of time, effort, and energy behind things that are not taking us forward. Sure. If you and me were here talking about the recent gossips, this thing will be full. But I'd like the few people who are here watching, because these are people who want to change their life. Let's take a very simplistic example, Dr. Edimo. Listen, somebody who saves $1,000 a month, right? In a savings account, for example, and let me tell you, that one can maybe is even paying you 2%. You're saving $1,000 a month in a savings account that pays you 2%, right? Think about it that way. If it grows by 2%, okay, over a period of 20 years, not 30 years, it can give you $490,000. It sounds like big money, right? But if that same amount of money is invested at an average of 10%, you are going to be sitting on $2.2 million in that same period of time. So you've made $1.7 million more. So wow. This is what it is. Anybody who is trying to play it safe, you are actually risking the most. When I see people tell me, no, I don't want the stock market, I want to play it safe, I laugh, because they're instead risking the most by just saving money. If you go to my YouTube channel, you will see a live stream I did a few days ago about the fact that when you are saving only, you are getting poorer. Guys, we need to understand how these things work. This is the way the economic system works. This is why the American stock market is the largest stock market in the world. The global stock market in this world is worth $54 trillion. The US stock market alone is 40% of the global stock market. I want people to understand me. The US stock market is the only stock market that has grown consistently over the last 100 years. There is a reason. You hear on the news, you know what? America is going to fall tomorrow. China has stopped buying treasury bonds. All of that is hot air. The Chinese companies and business people are still coming to invest in America, because this is where they can generate growth. The Chinese stock market over the last 10 years has delivered about 3 to 4% in annual growth. The US stock market has delivered 10 or 12% over the last 10 years. Forget it, guys. Don't get the hype. We are here talking facts. We don't come here to impress nobody. We are here, Dr. Edimo and I, we are determined to bring information that changes lives.
Absolutely, absolutely.
So we don't
absolutely.
come here talking bullshit. Guys, your best bet is investing in the US stock market. You must always bet on America. Forget that thing.
I usually tell people there are 3 ways to building wealth. You either start your business, you invest in the stock market, or you invest in real estate. The other day I talked about the folks that just acquire land and hold it for 10, 15 years. Can you imagine putting $50,000 on a piece of land and fencing that land? And in 10 or 12 years, you go and sell it for 75,000 and you're happy that you made profits.
You lost so much money. Lost so much money.
We are in that process. And one thing, and I think this is one topic we have to talk about. We have to start talking about, folks should start doing a return on investment calculation before they.
We should. I hope 2 pieces of land, so I know exactly what you're talking about. I know exactly what you're talking about.
Folks should start doing a return on investment. You know, I got one of my friends. You know, he has been building back home for the past 10 years. You know, and yeah, this is not even the laughable situation, but I understand. Folks in Cameroon, right? Those okay. They don't make that much money. Or folks in Africa, they can do it little by little, or they have limited options with investing. But even now in Africa, you don't have limited options in investing. We have talked about this. Nigeria, there is a platform on your phone. You get your account, whether it's 20,000 naira or 50,000. You don't have to tell me that you can't invest. If you can't invest, that means you're expending more than what you're bringing in. So that simply means you either find a new job or you find a passive income to increase your income.
Very true. Very true.
So one of the things that I realize is the biggest debt we all pay is ignorance. Ignorance will take us, and that is why some flies, they die because they follow the corpse to the grave.
You're so right, Dr. Edimo. You're right. Irene Habila asked something very important, and I think we should clarify that. She said, so is it better not to play it safe? And Irene, I want you to understand me here, and I hope other people are listening, right? When I say you play it safe, it's more risky. You can also play it safe on the stock market. That is the thing. Remember, we talked earlier about gambling and investing. There's a difference. When you are investing, there are certain things that guide your investment principle. You have a long-term view. You are investing in companies that are proven, and you know, we usually don't use the word guarantee, but generally, historically, you know that if you hold it long enough, you're going to be on top of the business. You are going to make money. Your company assets, the assets you're owning are going to grow. So playing it safe is trying to put your money in a savings account thinking it's safe because it's your cash. You can get it anytime. Or putting your money in a hole under your bed or something. You are actually pulling the greatest risk. Because you will wake up one day and that money is worth 50% less. What are you going to do with it? Right? That's what we mean. I see you also ask about a lecture on the return on investment calculation. Yes, we are going to do that. Probably in one of the other live shows, we will do that for sure. I have a proprietary investment calculator that I designed, and we're going to work on all of that stuff. We'll bring it to you guys.
Yeah. Thanks, Irene. I see you've been really, really engaging here online as well. And to all the others that have been engaging and part of this, I see we have a really good audience here today. Again, this is boring. This is boring stuff to some folks. They consider this boring. That's why we don't have a thousand views and stuff, because people work so hard, but they don't want to work smart. People work so hard. I know folks that work 16-hour shifts, but I'll tell you, they don't even understand how much they take for their 401k. They don't even understand how much hits their bank accounts. They don't even understand the foundation of building clarity and having some kind of an emergency fund, or figuring out their budget, what goes into, what is the want, what is your need, what is your savings and investment. They don't even take time to do that. But at the end of the year, they'll ask themselves, "Oh, I made $100,000 this year. I don't know where that money went. I made $200,000 this year. I don't know what the money went." But to take action, to meet the people that will help you structure, bring you clarity, and for you not just to work hard, but to multiply what you're working, that is where they lack.
Yeah.
And that is why I will say, and I will always say, the biggest debt we all pay is ignorance.
Yeah.
And not taking action. Because I have every day that I sit, like I have one property that's vacant now, one of my investment property. I had to take certain actions this week in order to make sure that I connect light and water. I get the folks to fix it up and stuff. I could be sitting here and say, "Oh, maybe I'll do it next week. But you know what? The rent is due.
The mortgage is due.
Month. Yep, the mortgage is due next month. I have to pay that because there's nobody in that property." So that is how you have to start thinking. Folks, are you in your 40s? Are you in your 50s? 15, 20 years from today, you won't be able to work the way you're working. You'll be frail. Some of us, we don't know. Maybe you might be ill. How are you prepared for that point? Are you in your 50s? Maybe you still have 15 or less years to contribute. Are you in your 40s? Maybe you have 15 or 20 years. These 15 or 20 years will be the most important 15 or 20 years in your life. Because some of these changes, if you don't do them right now, before you open your eyes, 15 or 20 years will be here. And guess what? You have $20,000 or $50,000 in your retirement account.
And you're struggling.
And Social Security is gone.
Yes.
And all you're telling us is you want to move to Cameroon or Nigeria or wherever, it will be more expensive. Everything you're buying today, factor in 3% cost of living adjustment. That's what prices will be in 20 years from today. So I did a math, $200,000 today, in 20 years, it will be close to $400,000. So whatever you're paying today, if your mortgage is say $2,000, that same property, it might be $4,000 in 20 years. How do you plan to live with say a $20,000 retirement account? Or to some that do not even have a retirement account, or to some that do not even have investments that they can sell. Some folks are banking on the houses that you're living in. It's you're gonna live somewhere. So even if you sell the house that you're living, houses will not be cheap, except you sell your house and go live in an apartment. Even apartments will not be cheap. That is why
move out to the rural area.
The rural areas will not be cheap either.
They'll be city by then.
So as we round up, right? I really want us to embark for you to preach some sense to these people. Preach, maybe say it in a different way, because maybe we're using the same terminology and it's not ringing a bell, right?
You know, Dr. Dimo, there's a Chinese saying that when the student is ready, the master will be ready. All right? The most we can do is share the information. Sometimes it lands on good soil, sometimes it lands on people. People have a different timelines which they understand things and react. My prayer for everybody is that they react at the time when they still have time to catch up. Irene mentioned something that I saw a video today. Where someone stopped iShowSpeed and asked him if he has an iPhone. He said yes. And they asked him if he has shares with iPhone. And he said, no, iShowSpeed needs to talk to us. We need to help that young man. He's made a lot of money over the last 2 years. He needs somebody to help him invest that money. I hope he has enough help. If anybody knows him, let him know that we can help him here. At the end of the day,
I'm sure he saw it. She saw that on my profile. I shared that.
Oh yeah.
So
okay.
you know the oldest guy at Wall Street that have been a broker at Wall Street. He has
correct. They call him with the hair.
Yeah.
I know what you're talking about. They call him Einstein, the Wall Street Einstein.
He was the one that interviewed iSpeed or something about that. So I shared that. High-Speed said he doesn't own stocks. He doesn't
Yeah,
even know about stocks, but he buys new phones every year. You know,
look at
so
that.
yep,
Correct,
yeah.
correct.
So to
I
close,
thought,
right? What do you have here as
um,
we round up?
no, just to round up, Dr. Dimo, I want to let everybody know, and this is just due to popular demand. We have this webinar that comes up not very often, but it was so successful in February. So many people have been asking about it. And so we decided to organize it one more time. And it's called the Wealth, Legacy, and Clarity webinar, guys. And let me share my screen for a minute here and exactly just inform you exactly what that webinar is. And it's important to understand, guys, it's coming up on the 30th of April, right? It's coming up on the 30th of April. And I need you to understand something. This is actually a step-by-step wealth workshop that gives you clarity, gives you structure, and a repeatable system to grow and protect your money starting now. It's important to understand something, guys. One of the challenges a lot of people have is not really how much they make. People make money. It's not the flow of the money. It's that most people don't have a system. Most people don't have a strategy. Most people don't have an easy to implement, a repeatable, a risk-free, and a stress-free system that permits them to build wealth slowly over time. And that is what we are going to be taking care of during this webinar. All right. And I want to just put it to you. Some of the things you are going to get from this webinar. It's very important to understand because this webinar is designed for people who actually might have some savings sitting around, who are working every day, who have done everything by the rules, but don't understand why they are not getting ahead financially. This is this webinar that is going to help you because it's going to be a 90 minutes hands-on webinar. And in this 90 minutes live webinar, I will be the one presenting, not my AI clone, not anybody else. It's going to be me. I will walk you step by step through a few things. And by the end of that webinar, you're going to understand clearly where you currently stand financially. No guesswork, no hype, no doubt. Number two, you have a simple wealth building system you can follow consistently right after that webinar, and it will help you to build wealth. You don't need to work with us again after that if you don't want to. We are also going to give you a 90-day roadmap with specific actionable steps, not just some theory. These are specific steps that have helped me and hundreds of other people I've worked with. In addition to that, you are going to live with clarity on how to identify and activate your next income stream because you must understand an average millionaire has 7 income streams. Most people fail because they have one income stream. It doesn't matter how much you earn in that one income stream. It's one single income stream. If something should happen, you are dumb. You are dead. Right? So it's important to understand that. And another thing you know is, let me just talk briefly about the different experiences. So we have 2 categories of tickets, guys. And we have the general admission ticket. And that general admission ticket actually gives you access to the 90 minutes webinar. It gives you the Wealth Clarity Workbook. It will give you a 90-minute money plan template. It will give you a webinar replay access. So 30 days after that, you can still watch it. It will give you a 14-day accountability sprint. So you will come into a private group where we'll coach you for 14 days free and get you on the track to really build wealth. And in addition, you're going to have a bonus, which is the ultimate investment playbook. Then for people who want speed, who don't care about the difference of $100, they want to get to their destination faster, you must get the VIP ticket. Because for the VIP ticket, you get everything in the general admission, but in addition, you also get guaranteed question and answer time with me. So after the 1 hour, 30 minutes, there will be another special 1 hour just for the VIP ticket holders. And at that time, you can ask me any question one-on-one, and I will guarantee to give you a satisfactory answer. It's an extended live session. You will also get something that the people in general admission don't get, which is the 50, 10, 20, 20 income structuring calculator. This is exactly how I use the calculator I use to structure my own income because I developed this calculator, and you're going to be able to use this to build your wealth. In addition to that, you will have other VIP bonuses. You have early access to our future events. And you know what? If clarity and speed matter more to you, then you want to be part of the VIP group because most of the times we have more people buying the VIP tickets than the general admission. But this is one thing that I want to guarantee you about this session. because we believe very strongly in what we are doing, you have a 7-day money back guarantee. What that means is you attend the webinar. If in 7 days you feel like it didn't help you, you didn't like what happened, it didn't change anything in your life, send us an email and we'll refund your money, no question asked. Sounds like a good deal?
Absolutely.
So we are not here to hook anybody. And another very important thing, Dr. Dimo is going to share a link with you guys because he's a great partner of us. So he's going to have some perks that can come to you if you buy through him. All right. So you make sure you secure your tickets.
Perfect. Thank you. Thank you. Thank you. I have attended this myself. I have paid for this. I've been a part. So you never stop learning, guys. It doesn't matter where you are on your journey with respect to investing. After getting off this call, I'm getting into a coaching session with my mentor. So I continuously learn. This thing, it's not a one-stop shop that you say, oh, I know it all. And that's where we make the biggest mistakes. So yesterday I was on a coaching call from 5 to 8 o'clock. I'm getting on another one. It has already started. So I'm getting there just to continuously learn. Doesn't matter where you're located. And just to tell you guys about WorldSmart, we are WorldSmart Advisory Group, where we help you engineer your wealth. We engineer your wealth. It takes intention for you to build wealth. And if you have that, if you have gotten to that stage to be intentional, we will work with you to set that foundation, to help you accelerate, to help you even in your distribution and that legacy side of it. That is what we do at WorldSmart. We also have an oncoming training for kids, because one of the things that we fail to understand is majority of us today, we are afraid of money. When we hear money, we panic. Meanwhile, money is something, some people say money is the root of all evil. That's lies, man. Pure
poverty
fallacy.
it's not money. Poverty is the root of all evil.
Pure fallacy. And you know why? They say the way you grow up, right, can have a big impact on how you treat money. So some of us grew up in extreme poverty. So we started making money. All we have to show is to lavish it or to show off, to try to show off to people that don't even like us. But if you see the people that they started not necessarily having a lot of money, but they started understanding the principles of money, they have excelled over time with money greatly. That is one of the reasons that we at WorldSmart Advisory Group, we have formed a company called WorldSmart Next Gen. With WorldSmart Next Gen, we take kids from the age of 8 and start teaching them money principles that will guide them. These kids, if they follow these programs and their parents help them through this process, there shouldn't be a reason that by the age of 35, they shouldn't all be millionaires in this country. That will be the easiest route to financial freedom for those kids. This is an opportunity for you. We will be sharing the link to register for that class coming April 18th. It's a 3-week session. The first 2 weeks will be tutoring, helping those kids, programming their mindset. And the 3rd week, we will be building a custodian account for those kids where they'll have their own debit card, they'll have their own checking account, they'll have their own savings account, and they'll have their own spending account. This is going to be a mind-blowing masterclass and bootcamp for kids. It's just $399. This is a giveaway. The value of this thing is worth more than $5,000. So again, our goal is to create impact at WorldSmart, and that is what we're doing. We're creating impact, creating the next generation of kids that will understand how money works from the initiation to the distribution and legacy stage of it. What are your last words here? And goodbye, my brother.
No, I think it's been a day of outpouring, right? We've said everything we would actually empty. It's Les Brown who says you have to leave full and die empty. Boy, we just want to make sure by the time we transition from this side of eternity, we've left everything on the table. I wish everyone the best, and just make sure you get yourself plugged into systems that can help give you the tools you need to become a better version of yourself, build wealth, and of course, leave a legacy on your way out. Until next week, I usually do live streams. If you check me out on my channel, subscribe to my YouTube channel, follow me on Facebook, on Instagram. I do live streams every night, Monday to Friday, from 7:30 to 8:30 p.m. on different topics around wealth building, purpose development, and building a lasting legacy. I'll see you soon.
All right, man. Thank you all. Thanks to all. Thanks to Blessing. Thanks to Christy Peters. Thanks to Irene. Thanks to all the folks that joined us here today. You know,
Yeah.
a big shout out to all of you, especially to all those that shared. Agbo, Reza, all of you guys. Thank you all for being a part of this journey. And until next time, we will connect again. Take care for now.